South African Reserve Bank insisting that its monetary policy stance remains supportive of economic recovery. It notes that the only interest rate hike to 4.7% this year since the hiking cycle began in December 2021. This forms part of the central bank's annual report for the financial year ending May 2022. Our business reporter, Tumisang Ndlovu, has more.
The current Reserve Bank annual report is released amid the abating economic effects of COVID-19, while rising inflation poses a risk to global economic recovery. In his message contained in this report, Reserve Bank Governor Kganyago warns that monetary policy looks set to tighten to counter increasing inflation as the consumer price index at 6.5% recently breached the central bank's target range of between 3 to 6%. Kganyago also raised this matter last week during an investment conference.
Regarding the current account surplus, the budget deficit is significantly lower than what everybody had expected, and our inflation differentials are in our favor. So we are getting into this situation on a much stronger footing than we were at the advent of COVID.
While the Reserve Bank is satisfied with its measures to fulfill its mandate during and post-COVID, some analysts say much more is needed from the central bank in a developing economy such as South Africa. Analyst at First Source Money, Reg Nkosi, shares his views.
While inflation is important, that we should have it in check, but now the tools that you have to apply to have that inflation in place shouldn't be the tools that they're using here, because you're going to hang on to the interest rates until that interest rate is able to kill all the inflationary pressures. But that can't be correct. So for the Reserve Bank to think that it's achieved its mandate by merely sticking to the 4.5 midpoint range, or alternatively 3 to 6 range, is a delusion. Look at the economy where it is right now. The question that arises is, if this one a breach, is the Reserve Bank going to continue to increase rates and continue to increase rates up to what point?
The Reserve Bank has also released its Prudential Authority annual report indicating continued progress in South Africa's financial systems, from banks to insurers that have shown resilience throughout the economic impact of the pandemic. On this report, Nkosi says while the Prudential Authority continues to do well in its regulatory role, much more is needed to accommodate the different and growing dynamics of the South African economy.
They are winning when it comes to perhaps checking up on our financial system. However, the behavior of the banking system in this country is quite frightening. I think it has reached a level where it has become political, no longer economic. I think if you look at the whole system, the way the SMME sector is being treated in this country by the banking system is quite atrocious. Out of 20 firms that go to a bank to apply for credit, only one gets approved. Now, our banking system here has, decided to take a tone which is anti-business. Or if not anti-business, then it's anti-SMMEs and anti-generally black people.
The Reserve Bank's annual reports come a few weeks before its next decision on rates to be made at next month's 3-day Monetary Policy Committee meeting, where analysts are widely expecting another hike. For Newzroom Afrika on Channel 405, I'm Tumisang Ndlovu in Johannesburg.